Bojangles on the lineup. Hey, Lars T on the lineup. What's up, everybody? You know what today is. It is Football Sunday, week number 1. This is not a Madden plays or a video game video, though. This is a video to look forward and see what stocks are going to move this week and see what news is lining up. We're going to have a look at some earnings and also some other stuff that may be reported. Should be a really quick and easy video. Sit back, relax, and just check it out, and let's see what's going to happen. Take care. Go Niners. Okay, guys, first on the list is Pfizer. Now, we all know Pfizer from their vaccine and also BNTX, who they partner with. So they are one of the ones that caught my eye from the Catalyst Watch for this week. On Friday, they are having a meeting with the FDA in order to discuss the data that's been collected regarding the COVID-19 booster shots. Why this is important? Because depending on the data, this could say whether or not the booster shots are really showing effectiveness, which can be proven, and this can obviously have a big ripple effect with other vaccine producers such as Moderna, and obviously we have Pfizer and then the BNTX area. It can trickle down to other folks like Novavax, even though they don't have an official vaccine out yet. They're still players in that same market. So that's one thing that I want to keep an eye on. I normally don't day trade Pfizer. I have day traded Moderna and BNTX as well. For a swing trade, that is much more likely that I would look into that. But again, I would have to go to the charts and look at where the levels are. I would be hesitant to try a swing trade knowing that this meeting is going to take place. Depending on whether or not the news is good or bad, it could really affect the stock. Now, if you want to hold on and you're a long-term holder of Pfizer, which a lot of people are, and we're talking 6 months to a year to longer, because Pfizer is obviously, they're not going anywhere no matter what the data is on the vaccine. But it can have short-term effects, so if you're trying to get in and out really quickly, this meeting could have a lot of meaning and purpose. So keep an eye on that one for Friday. Second on the list is mid-cap earnings. I tried to find some earnings favorites in this list. There are a lot of Q4 earnings being reported this week. So it was almost impossible for me to dig through this list and find one that I wanted to focus on. So honestly, it's going to have to be a catalyst or something that shows up on the gapper to the point where it moves them above everybody else. Because right now the list and the pack was so thick that it would have been impossible. I could have sat here for hours trying to identify and sort through those. So just keep in mind there's a lot of Q4 earnings this week, so that can definitely be a mover. Next up is ARK Investments. So I have earned a little bit of money with ARK Investments way back when they were under $100. It was more of a swing trade. Kathy Woods is always in the news. If you know anything about ETFs or anything around ARK, you know that she is very controversial. She invests a lot of money in stocks that other people don't have faith in, and a lot of times she hits. Her ETFs have made a lot of money last year, so that's why she is so popular right now. So on 9/14, they're going to have their monthly webinar series, which is going to discuss the stocks that they've been investing in recently. One of the reasons this stood out to me is because of the stocks that Kathy Wood has been investing in, mainly the new Robinhood and DraftKings. I am a fan of DraftKings. I'm a fan of day trading DraftKings just because of the gambling sector they're in. They're always leading the way. Even though we know Barstool is in that sector now and they're fluctuating up and down. They have been over 100, but now they're down at a reasonable price. DraftKings just has a lot of movement on a day-to-day basis, making it fun to trade when they are moving and volatile. So I want to keep my eye on that. We'll have to hopefully wake up one morning and see them on the gapper list. I don't know if they're really going to be running up 5 to 10%. But a good 2% movement overnight would be something to catch your eye and at least have a look at it. All right, next on the list is CLOV, better known as Wall Street Bets Play. Now, a lot of people are not big fans of Wall Street bets. Me personally, I like them because it causes volatility. And volatility means movement. And movement means volume and that's exactly what I want when I'm day trading. So honestly, I don't care if a stock is worth the amount of money that people are willing to pay for it, because all I care is getting in and getting out of the trade. So CLOV is definitely one that I'm going to keep an eye on. It's getting a lot of traction on Wall Street Bets, as it has for a while now. So we'll watch that one, definitely on the gapper list when I wake up in the morning, and hopefully we can see it pop up one of these mornings where some of the shorts are getting squeezed out. I'm not sure of their current short interest, as it normally takes a couple of days for that data to catch up with the actual short sellers covering, but I'm pretty sure that it's still high, and as long as it is still high, then CLOV is always going to be in play. Okay, last up is Tesla. So Tesla isn't really in the news. Wrong, that was a joke. Elon Musk is always in the news. Now the catalyst, normally it only takes one tweet from Elon to either send Tesla up or completely crash it to the ground. Right now we are looking at more of levels than we are with tweets with Tesla. What we're about to see in the chart is what Tesla traders normally don't like, and that is consolidation. So let's jump over to the chart on Tesla and we'll have a look at the levels right now. Alright everybody, here we are on Tesla's daily chart. I took a lot of lines and markers out, that way we could see the candles a little bit better. I want to zoom in and try to give you a little bit better view, because I know it's hard to see on YouTube when the chart is so spread out. So here is the level that I want to start at before I zoom in. So right here is where I started my trend line, and as you can see, this is in between May and June, when it dipped down to one of its lowest points in a long time, which was around $560. If we scroll back and look at what Tesla was doing before this, the amount of volatility that they had on a daily basis was really tradable and interesting. So from these two high points here, we can see a huge movement up and down for several days, which gave a lot of trading opportunities. And there wasn't a lot of consolidation. There was every once in a while, but at least there was a lot of movement and volatility. Now, for the past few months, what we see is a lot of consolidation. Now, we have had a consistent move upwards, as you can see with this trend line. And I wanted to show you a few areas of consolidation at the beginning of June, which happened here, and then right before August, which happened here, and then we bounced off this trend line again where it got really close, but it just didn't want to fall back through. The problem with this is normally Tesla traders want this thing to move a lot, because Tesla is known to move 5, 6, 7% in a day. That doesn't sound like a lot, but when you're talking about a $700 stock moving 5 to 7% a day, that's a lot of money. So I know that I myself have enjoyed trading Tesla just because of that. So this is one of the things that I feel like is holding Tesla traders back right now. As you can see, there have been a few days in here where it's gapped down and then bounced back up, but it just hasn't kept that momentum. As you can see, when it starts moving back up, what happens? We have more days of indecision where the stock barely moves at all. The one thing that I want to finish this video on and show why I'm keeping my eye on Tesla this week is because of this previous high of 780.58. This was where this candle touched here, and as you can see, it touched these bottom three candles over here. Now, as we were approaching 780 last week, you can tell that once it didn't continue to move higher, Tesla sold off the last day of last week, last Friday. And we actually ended down around $737. Now, why this is important is this may be an indicator that Tesla was not ready to continue up to this 780 level, and that it may make an initial pullback before it tries to push back up to 780. So what my eyes are on right now is for Tesla to move from 737 possibly back down to the 710 to 700 range before it goes into another period of consolidation and moves higher. So again, I would have to wake up and see what Tesla does in the morning before I were to get really antsy and want to jump in on a trade on Tesla, I would want to see it move a little bit lower before I was interested in taking a swing position. But I will keep an eye on it for a continuous move down for maybe another day or two. As you can see here in this previous area of consolidation, there were several days of gap down for Tesla before they hit that trend line mark and started moving back up. So this definitely may present an opportunity to short Tesla a little bit lower before they bounce back up. So that's what I'm going to keep an eye on. It's always fun and interesting to trade Tesla. Honestly, if I was better at trading Tesla, that's all I would do because it normally has a lot of movement. But for the past few months, it just hasn't been a real big winner. So we'll keep our eye on that. Okay guys, I hope you enjoyed the video and I hope it brought a little bit more information to light. If you enjoyed the video, please feel free to give me a thumbs up and let me know what you thought in the comments. Take care.